Surround yourself with really good advisors. I know that's said really well, but let's talk more about how to pick advisors. I would say that as a founder, define your philosophy for how you're going to grow your company, how you're going to treat your people, the people you're going to support, and find advisors who are experienced in the area where you have gap. Go to accelerator programs, go to your local co-working space, go Google spaces if you don't have any in your community, and search out people that have had success in the areas you'd like to have success that you're not very good at, and then offer to comp them well for being in the company. And in that relationship, over a couple of conversations, you'll figure out if they're just trying to get equity or get compensation,
Mm-hmm.
or if they're really in it for a mutually vested interest in the vision you're trying to drive.
Hey everyone, this is Devin Miller here with another episode of the Inventive Journey. I'm your host, Devin Miller, the serial entrepreneur that's grown several startups into 7- and 8-figure businesses, as well as the founder and CEO of Miller IP Law, where he helps startups and small businesses with their patents and trademarks. And if you ever need help with yours, just go to strategymeeting.com. We're always here to help. Now, today we've got another great guest on the podcast, William McGuire. And William initially went to school at North Carolina State and went into, I think, aerospace and business, and then did charity fundraisers for a period of time, as well as, I think, grew hops for beer, and also did some programming and IT work, as well as some event productions in the charity events. Then worked for a staffing company for a period of time and did some IT work for them. Also went to work did some media work in general for a while. Moved to another company, and then moved to an investment and crowdfunding company founded in now I'm going to pronounce it right, in Colo. Is that right?
That's correct.
All right. I was wanted to make sure I did pronounce it. So founded in Colo, and working on the founding community for companies to help to grow and to make exits, and to make the companies investable and whatnot. And he'll dive into a lot more of what that all means. But with that much as an introduction, welcome on the podcast, William.
I appreciate being here. Thank you, Devin.
So I gave kind of the brief high-level introduction or run through of your journey, but let's go back a bit into to when your journey started, and kind of tell us how you got going in college and how it went from there.
That's pretty good. I mean, you covered it, so I don't know if I need. I'll cover it a little bit. So when I was in college, you mentioned street festivals. Yeah, I was doing aerospace engineering at the time, minor in entrepreneurship, and I had a lot of friends that we were with Engineers Without Borders, and we decided, hey, what would it look like if we shut down one of our major thoroughfares, Hillsborough Street, for all-day street festival, and raise money for charity. So we did that 2 years running, had 40,000 people the second year show up, became a kickoff for street construction that people can still see today. And there are many other groups now that do street festivals there. So that's fun. And then when I was in college too, we were trying to, in our entrepreneurship class, work on a project together. So we said, what about beer production? Because at our time, there were only 34 microbreweries in the state now. Or then, I don't even know how many it is now. It's probably like over 400 or something. But we're like, North Carolina was looking for a cash crop, and we said, what about hops for beer production? We got lots of agriculture space. So we looked at that. And then I was application programming with some buddies, and just doing that while I was in college. So it was a lot of fun. And then that flash forward, I followed my wife, who is in ministry. And I said, well, as long as she doesn't get a calling to Alaska, then I can do all three of those at once. I can do event production, I can do, grow hops, and can still program. So luckily she got a call to Virginia. We moved up there. I worked for a group that was a founding B Corp member. So for people that don't know what a B Corp is, it's basically a company that wants to do more with their profit than just give it to the man. And so people probably recognize Ben and Jerry's, Patagonia, Newman's Own, those types of companies. Those are B Corps. So I worked with a founding B Corp member that was part of that whole movement in management IT consulting. And then moved over to, it was 2016, and found this whole world we call investment crowdfunding. And all that is that now anybody can be an investor in early stage companies, or be an investor in their backyard. And companies like Main Street, or apartment complexes, or anything that's going up. So it's a pretty cool world. And we were trying to find a way to get back down to North Carolina. And I thought I was supposed to get a job, but I was sitting in the Innovate Raleigh Summit, downtown Raleigh, 2018. And I was listening to about 800 founders complain about a lack of access to capital. And this was 2 years into after my wife and I had been investing in this world for a while. And what I couldn't understand was that there had been 120 million raised, I think at that time, been several hundred founders who had gone through the process. And I think a total of 10 founders out of North Carolina, my home state, had raised capital in this way. And I could not figure out why. So did a long story short and some other personal things going on in my life that I could share a longer story on that was going on with my dad, my mom, and a couple other things. I found out I was supposed to be an entrepreneur again. So I moved out of being a consultant and I'll call it more corporate America or for corporate America to being an entrepreneur again and trying to find a way to get all the resources a founder needed to build an investable company, which I define as, hey, look, even if you weren't raising capital, people would want to put money in your company. And then helping founder understand all the different ways that they can potentially get funding into their company, whether that's off of revenue or off these new models. So that's my journey.
So now I'm going to go back because you jumped over a couple parts I thought were maybe, or at least questions I had along your journey. So
Sure.
So you graduated, you got into hops, you got into IT, you got into event planning, and said, hey, why not do all three? As long as my wife doesn't go to Alaska, I should be fine. You did that for a period of time. Now, if I remember, and we chatted a bit, you also went and worked for a staffing firm and did IT development for a period of time. Is that right?
That's right. Yeah, right before I jumped into the management IT consulting firm, I'd worked for a company that got sold to a global company similar to it. Our CEO of our company was dying of cancer at the time. And so he was looking for a match for people to sell the company to, and found this company that he sold us to, and ended up working for them across one of the largest media companies in the US that went through Berkshire Hathaway's acquisition of part of their assets, if that hints at anything. It's working for a merger and acquisition firm, mainly coordinating their website development, and then also working for the largest renewable or hydro renewable energy company in the US and Canada. And it was a lot of traditional management IT consulting work, worked with a lot of great people. And like the management IT consulting firm that I moved to after that just better aligned with my values for the way they were conducting business and the way they did things. Wasn't there was anything necessarily wrong about the previous company. It was just more aligned from a vision perspective. So it was a nice segue.
So now you do that for a period of time, and then and it worked for some of the companies, and you touched on it briefly, but what got you into investment, crowdfunding, making companies fundable, helping them to grow, and going your own way? In other words, you'd worked for other people for a period of time. You'd had success, you'd managing multiple things. What made you decide, okay, I'm not going to do consulting anymore, not going to work for others, I'm going to work for myself? Kind of what was that? Was there a trigger point? Was there something that just stood out to you? Was it more of a slow evolution, or kind of how did that evolve?
Well, one of the triggers for that was when I was in the Innovate Raleigh Summit and I went back home and I was concerned with my wife, we're personally benefiting from this knowledge we have of this industry. I mean, we've had several exits off of the founders that we've invested into on these public models. At the time we hadn't, because everybody was still questioning whether or not this world was going to work or not. And it's working really well. But there was also this thing I had in the back of my mind that maybe I'm not supposed to be an employee anymore. So one thing that's happened with my dad and mom at the time was that my mom and dad were traveling from Wilmington to Johns Hopkins University, Johns Hopkins Hospital, because my dad had pancreatic cancer. And he kept blowing past all their expectations of, oh, you're going to live 3 months. Oh, you got 6 months to live. He ended up living 2.5, 3.5 years through that whole process. But it was the weekend that I had gone to the Innovate Raleigh Summit, and I came back. It was the last weekend that my dad and mom needed a place to stop halfway. Our house was halfway in Richmond, Virginia on that drive. That was the last time they had to do that every 3 weeks. And it just all clicked at once. I said, hey, Liz, if we really want to represent and be authentic to our values with our kids and say, we're really trying to create a better world, the management IT consulting firm I was working with, they had an awesome model. our equity was gifted as a for-profit entity. Our equity was gifted to 2 public foundations. So upon a dissolution event, that became seed capital for other companies. So I said, well, that's impactful. That's super impactful because it impacts people picking and choosing where that capital goes. But I said, what if in the investment crowdfunding industry, where literally anybody can put money into a company, imagine somebody have had the opportunity to put $100 in Uber when they were first getting started. When they went IPO, I mean, $100 in Uber or $1,000 in Uber is worth 1.5 million on exit, even after dilution. And everything in between. You know, nobody in the stock market where people are trading on Robinhood or anything else had access to Uber until they were valued at 80 billion. So the majority of the wealth, the size of the private markets is about 5 times larger than the stock market, if not larger than that. The majority of the returns are made in the private market. So I said, what if instead of having a centralized entity pick and choose where they're going to, you know, potentially drive impact in community, if we just democratize the ability for the community to invest in these companies, if we make them aware this is even a possibility, I bet people will put part of their returns back into carrying on areas that match with their proclivity. And I said, my child, you know, our 2 children have different proclivities than my wife and I. They have different interests for where they want to give back. You probably do with your wife and children. Everybody does. Sure. What if we just make them aware there's this market that's been there for 80 plus years they haven't had access to or we're not aware of, and allow them to choose how they want to participate, allow them to choose how they want to make impact. And so that's a long story for kind of where it resonated in my philosophy, but that was why I started the company. I wanted my children and their friends and other people on the way to have access to capital and have the ability as, you know, not only Americans, but as humans to basically choose where they want to drive impact and have more resources to do it with.
So now you have that kind of idea and then you say, okay, I want to go do my own thing. I got a bit of the, you know, the mission, what I want to change and make improve and make better. So you go out and you start that. Now, did it, you know, you started it and took off like a rocket ship and it was just all, you know, all upward trajectory? Was there bumps and, you know, ups and downs along the way? Was it figuring things out? Did you have to pivot? Any or all the above?
Oh yeah, absolutely. So when I first started out back in 2019, the industry was still pretty young. I'd say it's still pretty young now. And I thought, hey, look, if I just go make people aware, I make founders aware that they can leverage these funding models and just provide them education around here's how you can go after it, then they'll just do it, right? Because it's amazing. It's working in California and Texas and Boston. That's not how things work over here. People have to see it happen in their backyard. They have to see their friends do it. And even then, like 3 or 4 people have to do it before they're even interested. So instead of chasing after founders and trying to convince them how great this new model of funding was, and also seeing, there's also another combination. There was a lot of what I call offerings on platforms that I were just like, those companies don't seem like they'd ever return any money. They're just not structured properly. You know, I really wanted both. If more people are getting to the model, how great would it be if people had the opportunity to put money into companies, but those companies have a high probability of potential return, or higher probability than they would be, not the 1 in 10 model, but the 8 in 10 model are successful. So in early 2020, we pivoted to only working through partners, those people that are vested in the long-term success of the founder community. And we also found a way that it's not just about people raising capital. It's more about the founder's ability to grow a really successful company while having access to raise capital or to fund their company in any way that is beneficial to them. So as a result of that pivot, I haven't done sales ops as I would traditionally call them. All of our founders that we work with come from referral partners. They all come from other founders that found success in the model. And we've had far more founders that have actually ended up growing off of revenue and through partner channels and sales channels than they have off of raises. And to me, that's an ultimate success story, because if a founder can find the needs they need for their company in a way that resonates with both their philosophy and their strategy, that's when a company is successful, not just trying to drive them towards an investment raise. So that was a big pivot. I'd say that's kind of like a big pivot in our model, but it was
Hmm.
It was a major pivot in philosophy, but it was a minor pivot in practice, if that makes sense.
No, definitely makes sense. So now, that kind of brings us up to today. Now, looking a bit into the future, what do you look and say, what does the next 6-12 months look like for you guys?
That's a great question. I mean, really, we're doing two things. We're just helping surround founders with the resources, the community of experts they need, so they can basically do what Henry T. Ford did, where he had a push button on his desk. And if he had a question something, he could just push a button and find an answer to it, because there's plenty of other stuff to guess at than having to know everything.
Mhm.
And then making sure that founders are aware that they have this ability to grow their companies, seek investment, get funded however is beneficial to their company. So in that, I mean, we performed two acquisitions of two companies, December 31st, right after closing our private round, rebranded from crowdfunding, seed and colo all in a quarter. And we did that all for the benefit of the founder community. So now we've got expertise in verticals around marketplace founders like the next Ubers, Airbnb, gig economy founders of the world. We have a pretty industry agnostic approach to how we help founders grow, scale, and exit. One of our last founders right now, they have a 90% profit margin on the software they sell.
Cool.
And we helped them put in a sales strategy model for that. And they've already deployed it and they're growing like crazy. It's only been a couple months. And one of our other founders just launched his first location for a commissary kitchen back in December. It became profitable in February. So everybody's like, how do foodpreneurs survive during COVID? And it's, he's helping them do that as well and grow and scale their businesses. And he's opening up a second location. So it sounds like when I talk about what the founders are doing, it sounds like a lot,
Mm.
but it's really centered around just four primary ways of growing a successful company. And we just hone in on those with the founder community and make sure the founders have plenty of founder to founder interactions and experts that they need to find those resources so they're not guessing, so they can really just focus on growing successful companies. So it's a lot of fun.
That does sound like a lot of fun. Sounds like a fun trajectory to be on. So, well, now that kind of brings it up to where you're at today, a little bit where you're heading in the future. And we'll transition to the two questions I always ask at the end of each podcast. And just as a heads up to all the listeners, we also have the bonus question where we'll talk a little bit about intellectual property as a follow on to that. So if you'd like to hear a little bit about that, just make sure to stay tuned. But otherwise, the first question I always ask in a podcast is, if along your journey, what was the worst business decision you ever made? And what did you learn from it?
Oh, great question. Trying to build a business without a sales and marketing team was probably my worst decision ever. So one of the things that's common in some companies, but not all others, but as an entrepreneur, I tried to build a company and I thought that if I had a good technology stack, that would build the company.
Hmm.
Nobody buys tech. People sell because you have something of value to provide them and you're able to generate awareness around that and grow it. So that company completely flopped. So that was probably the worst business decision I ever made with a partner. But from the learning of that, have been able to incorporate that knowledge to a lot of founders and save a lot of founders tens of thousands, if not hundreds of thousands of dollars, because they take a technology first approach to building something. I'm like, why don't we just go test this out real quick? And it might cost you, I don't know, $30. And they find out within less than a month whether or not they can sell their product or service, and then they can spend money on tech.
No, and it's always funny. It's kind of the old movie, if you build it, they will come type of a thing. And too often you get so enamored with the technology, say, oh, if I make the world's best technology, of course people will buy it. We never learned from Betamax, or we never learned from the 8-track or cassette or anything else, that just because you always have the superior, the better technology isn't the only aspect of it. And yet, it's funny how often you kind of start to drink your own Kool-Aid and think how cool it is. And people would, of course, pay me for this. And yet you have to get it out there, and you have to get the word out there and convince them and help people to know what it is and why they'd use it and how they'd use it and why it's better and why they should pay for it. And if you don't, it's certainly a much, I'm sure there are occasional successes there, but it's a much harder road to hoe. So that definitely is a great lesson to learn.
Absolutely. I mean, I think at the end of the day, even if we look at the bigger companies of the world that we buy from and, everything's push a button buy it, we're still effectively buying from the relationship we see with the people that are on platform, not necessarily the product or service the tech provides. So it's an interesting psychology that gets incorporated.
Absolutely. So now we'll jump to the second question, which is if you're talking to someone that's just getting into a startup or a small business, what would be the one piece of advice you'd give them?
Surround yourself with really good advisors. I know that's said really well, but let's talk more about how to pick advisors. I would say that as a founder, define your philosophy for how you're going to grow your company, how you're going to treat your people, the people you're going to support, and find advisors who are experienced in the area where you have gap. Go to accelerator programs, go to your local co-working space, go Google spaces if you don't have any in your community, and search out people that have had success in the areas you'd like to have success that you're not very good at, and then offer to comp them well for being in the company. And in that relationship, over a couple of conversations, you'll figure out if they're just trying to get equity or get compensation, or if they're really in it for a mutually vested interest in the vision you're trying to drive. And that's probably one of the biggest pieces of advice I would give.
No, and I like that. And I think there's a ton of wisdom there, and that and it may not always be equity, but surrounding yourself with knowledgeable people that want to see your success and are willing to help out. And that can be in the form of everything from a good board in a company to a good co-founder, to good employees, to mentors, to people that, that you can bounce ideas off of, a good spouse. There's a lot of forms, but I think, getting those people that are in your corner, that want to see you succeed, that are willing to help out and provide that invaluable advice definitely can make a huge difference. So I like that as a feedback. Well,
Yeah, that's a great extended list there. I was going to say that's a great extended list there, Devin. Absolutely.
So now, as we wrap up, before we jump to the bonus question, for all those normal listeners don't want to listen to IP, and sometimes I don't blame you. But now, if you for people who want to reach out, they want to be a customer, they want to be a client, they want to be an investor, they want to be an employee, they want to be on a board member, they want to be your next best friend, any or all of the above. What's the best way to reach out and find out more?
Just reach out to Will at incolo.io. incolo.io.
All right. That kind of has a nice ring to it. INCO or COLO.io. You said it a lot nicer than I did, but no, that's great.
We talked about doing Incolo Co. just so when we're at the beach, we can do a special event or something. Anyway.
That's right. That's funny. All right. Well, perfect. Well, I definitely encourage people to reach out, find out more. Now, for all of you that are listeners, if you have your own journey to tell and you want to be a guest on the podcast, feel free to go to inventiveguest.com, apply to be on the show. Two more things as listeners. Make sure to click subscribe in your podcast player so you know when all of our awesome episodes come out, and two, leave us a review so everybody else can find out about all of our awesome episodes. Last but not least, if you ever have any questions about patents or trademarks or anything else with your business, feel free to grab some time with us to chat. Just go to strategymeeting.com. Now we get to go into the transition into the bonus question, which is always kind of fun because one, I get to talk a little bit about intellectual property, which I always have a fun time doing. But also in two is it flips the tables a bit. And now rather than me asking the questions, I get to answer the questions. So with that, I'll turn it over to you to ask your top intellectual property question.
Sounds great. Well, I sourced wisdom from my team on this one to see what question they had top of mind. And I imagine a lot of founders do too. With the rise of NFTs, these non-fungible tokens, what do you think do you think they'll actually stand up in terms of people's ownership over those? Like what are the biggest IP considerations around NFT in your opinion?
Yeah, and give our people or people that don't know as much about what an NFT is. It's a non-fungible, if I can say it, or without getting or non-fungible token, or sometimes assets if you wanted to broaden it out, but non-fungible tokens, and that can be everything from it gets tied towards oftentimes cryptocurrency and kind of how that works, but even you can broaden it out, and sometimes that is digital art. One of the things that people oftentimes will do is digital art or digital collections. Trading cards are now or maybe are digital. Or video game virtual items are another one. It has a broad thing, and it's a very evolving and unknown field in the sense that it's just, if you're to look at the legal field in generally, it always lags behind technology, and there's a little bit of irony, especially as your patent attorney, it lags behind, but the law is always slow to catch up with society. So usually you'll have things that come about, things that, had or weren't initially considered in the law. And then the law has to figure out, now, how do we deal with these things? And I would put NFTs in there in the sense that, in one sense, it's certainly an asset. If you go buy an original work of art, whether it's a painting and it's on the wall, or whether you buy an original work of art that's digital, or if you go buy unique tokens in a video game, you can own that. Or, you know, you're somebody still had to create that. There is still a intellectual property or to that. But on the other hand, it makes it more difficult to, if they're easily copied, if they're easily or reproduced, then how do you know, artwork, and we'll stick on artwork just as an easy one. You know, artwork, there's only one of a kind. You know, I paint each painting by brush and everything else, but now you're doing that. How do you have that exclusive nature? So it's interesting when you get into that, whether it's cryptocurrency or other things, how you deal with that with the intellectual property. And the short answer is, I don't know. It's a one where there's starting to get case law around it about how you own it, about how you can keep it, or it can keep it unique and different to everybody else, and how you value that, how the law do it. But the short answer is, there isn't a good how that's going to be treated as intellectual property. Now, I think that, you know, it should be treated similar to every other type of asset, where if you create it, if you own it, if you pay for it, then all the same laws hold to it. But I don't know. It's a fun question, and it's one where I think that it should evolve into, or similar to all other assets, but is one where it's the law's lagging behind, and there isn't a definitive answer. So that wasn't probably a fulfilling answer, but it's the best one I can give.
So we need more precedent set, is what I'm hearing. That's good. Well, can I throw a second one at you?
Absolutely.
So I get this one from founders a lot too. And I guess this can go both ways. When a founder hasn't trademarked their assets, like their name.
I forgot, but I'm going to interrupt your question just because I did have one interesting example of what I thought was an NFT that was by Nike. And I don't know if you're aware of it. So they just, and as an example, and also for the listeners, they had what they call the cryptographic, which was a digital asset for footwear. So they would actually start to incorporate in their shoes that it was a digital asset. So you'd have, you know, almost different icons you can do, and then you pay for exclusivity to have certain digital things, you know, certain things displayed on your shoe that would have a little screen that would look cool. And they actually did go get a patent on that. And so it was interesting. And I was going to mention that, and then it slipped my mind, was that, you know, that one's an interesting one where the way that they authenticated it, the way they integrated it into a shoe, that was part of it. And then it was also the NFT that was it was a digital asset that was in a shoe that they only sold so many. It was kind of that collector's items, you know, almost the Michael Jordans, but now it was a digital or an NFT. So there is some precedent, and I didn't want to say there isn't any, but there's certainly much less precedent than what's out there. So now I didn't mean to interrupt your question. Go ahead with your second one.
Well, now that gives me an interesting follow-up, because we actually have a couple people that were doing like shoe arbitrage. So I'd be interested to see what those shoes are trading for. But anyway,
I haven't followed up and to see how much it's worth or where they've got or how much they've implemented it. But I know at least on the patent side, they went down that route of actually having that integrated in to make it a digital collectible version of a shoe. So now you were going to talk or ask one other question you had about trademarks.
yeah, I was curious, when a founder hasn't trademarked their brand, their asset, their just their name or their logo or anything, what happens if they don't do that, but it's been in use for a while? How does ownership get treated if somebody else comes in and tries to copy that for a similar industry?
Yeah, and there's I'll give you the standard lawyer answer of it depends, which is always how lawyers answer a question. But there's some general, I mean, and it does depend, you know, this is general advice, and so it does vary a bit situation to situation. But in general, let's say I'd gone out and I made Devin's restaurant. Now, I had a much catchier name, which I can't think of off the top of my head. One of the previous podcasts that I was on, they talked about Scooby Dooby Dooby Doo was their restaurant. So maybe I'll use that as the name. But let's say you went out and you started that as your restaurant and you got it going. You know, you were doing it, and you didn't necessarily get a trademark on it, but you've been around for 10 years. And then somebody else came along, and let's say you were in Chicago. I was choosing a random place, and you were doing that in Chicago. And then somebody else in California, San Francisco, decided to do the same thing. And you're saying, hey, well, they're copying my brand. You know, what rights do I have? And let's say, to add on to that place in California now went and did file a federal trademark on it. So they did get that protection. They went all the way through the process. Well, then what happens is is because you were the first person to use it, you have some common law or state law rights that go along with it, generally common law rights that allow you to continue to use it in the geographic location that you've been operating in, but it stops you from expanding outside of that area. In other words, if you're in Chicago doing it in Chicago first, and you were, and before the other place in San Francisco started doing it, you can continue in Chicago, but you can expand out. So now let's say you want to sell off your business, you want to franchise, you want to license, you want to do something else, or let's say you pass on, your kids take over, they have bigger aspirations, or someone wants to merge or acquire you, anything else, it severely limits where your trademark coverage is to the current geographic location you're in. So you can continue to use it, but you can't expand out. Same thing with a person in San Francisco. They basically now have the rights to everywhere in the US except for Chicago, where you have those original common law rights. So it kind of gives you limited protection, but it can create a lot of headaches.
So once you have a brand, go grab it.
That is a short takeaway from it. If you have a brand that you're ever wanting to do anything with, especially beyond just a local area or mom and pop shop, serve the local community, which are all great businesses, but if you're ever wanting to do that, or you think anybody else will ever want to do that with your business, make sure to grab the trademark for it.
Makes sense.
All right. Well, with that, we'll wrap it up for there. And those were fun questions to chat about intellectual property. Thank you again, William, for coming on the podcast. It's been a fun and a pleasure, and wish the next leg of your journey even better than the last.
I appreciate it, Evan. Thank you for hosting me. This was a lot of fun.
Absolutely.